Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation today is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I look at positional analysis. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. I think this is a new way of looking at the market that provides a significant edge. And on-topic questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and also the chat in YouTube. So again, questions and comments are welcome. All right, let's get started. What I want to cover today is, first of all, go over economic data and events for today and the rest of the week, and then briefly touch on what's going on next week. And then we'll go through our positional analysis, and then we'll take a look at some setups. And there were some great setups today. All right, so first of all, I think the key news for today was the ECB rate decision, and they did go ahead with their forecast rate increase of 50 basis points. So previous was 2.5%, and now it is 3%. And I just saw something come over my news feed just a couple of minutes ago about they were afraid to do anything less than expected in fear of spooking the market. So, for what that's worth. And anyway, this did not seem to have much impact on the market, but it was something that I was watching. All right, then tomorrow, of course, is the monthly options expiration. That is for the month of March and also for the quarter. Now there's also an end of month. I guess maybe that's the true quarterly expiration. But anyway, March is a large expiration. And remember, for SPX, there are two expirations. There's the AM settlement at the open, and then the PM settlement for the weeklies at the close. And then next week is the FOMC meeting and announcement at 2 p.m. on Wednesday. And I believe also next week is Wednesday is a VIX expiration. All right, let's take a look at our positional analysis. And here is the S&P 500 futures ES in Bookmap. And before I dig into this chart, I'm going to take a look at a larger time frame, and we'll take a look at SPX. So this is a 20-day, 1-hour chart for SPX. This is a Thinkorswim chart, and I'm showing just price and key levels here. These are Spotgamma levels that are provided to Spotgamma subscribers They're updated in a Think script. You have to update that manually. It takes a couple of minutes. All right, so the key levels that are in play for today are, I guess, really in the range of possibilities, but not really in play today. Is the put wall at 3,800, and then here is the 3,900 level. That's not a that's an L2 level. And that is also the key gamma strike. So the key gamma strike for SPX did drop from 4,000 to 3,900. Here's the 3,950 level, and that is the volatility trigger. That's Spotgamma's proprietary gamma flip level. Market maker's position below that level is negative, and their gamma position above that level is positive. I'll talk more about that level and in a few minutes. And then there's the call wall at the 40.65 strike, and remember it dropped down yesterday, and that is also the collar strike for the JP Morgan collar that expires on March 31st. So those are the key levels, and that is a 20-day 1-hour chart showing primarily the rally that began yesterday with the test of the 3850 level, and now SPX has gone above its upper edge of the expected move for the week, and then also is trading around 3950, the volatility trigger, and that was also noted as a resistance level in the Spotgamma AM Founders Note. All right, so that is a 20-day 1-hour chart, and then let's just zoom in a little bit closer. We'll take a look at another Thinkorswim chart, and this is a 1-day 1-minute chart, again just showing SPX and price, SPX price and levels. So here is the 3,900 level. That was noted as resistance also in the AM Founders Note, and price passed right through that, and now seems to be finding more resistance at the 3950 volatility trigger level. So nice solid uptrend in SPX today, as well as many other stocks. All right, let's take a look at Bookmap now. And the levels that I was just showing are also shown on this Bookmap chart, and I have 2 columns of levels here. This is the Spotgamma Cloud Notes provided to Spotgamma subscribers, and this is noting the key SPX levels. There's the 3950 volatility trigger and also resistance level. And there's the 3,900 level, the key gamma strike. Excuse me. And there's a comment in YouTube, screen clarity required. Sorry, I don't know what that means. You might, if you're watching on YouTube, you might need to adjust your quality settings. So go to your settings, and you can change the quality there if it's fuzzy or not clear. But at 720p, you should be able to see the screen clearly. Okay, so this is the S&P 500 again, and the levels that were in play today were primarily, in the morning session anyway, the ES levels. 3,900, 3,950, and now the 4,000 level is in reach. And again, also it looks like this SPX 3,950 level is acting as resistance or somewhat. It slowed down the S&P 500 anyway. All right, I'm showing, I want to mention also, I'm showing another column of levels. These are my cloud notes. And I'm showing several different things here. First of all, I'm showing the big round numbers for ES, the zeros and the 50s. And I'm also showing the same 3950, SPX 3950, and 3900 resistance levels. Spotgamma is using a 30-point difference between ES and SPX. And I calculated it today at 32 points. So I'm showing these levels just a little bit different, just a little bit higher, and that's where the white lines are at those levels. Okay, so those are the levels in play, and we'll talk about setups in a few minutes. Let's talk about shifts in levels now. And for SPX, I mentioned before, the key gamma strike or the absolute gamma strike dropped from 4,000 to 3,900, and that's pretty significant. The 4,000 level in SPX has been the absolute gamma strike for quite some time. And we'll look at the gamma level charts in just a couple minutes, and it'll become more clear what I'm talking about. So that's SPX. That was the only change in level. And then for SPY, the put wall actually dropped down from 390 to 380. So a drop in the put wall for SPY, and then an increase in the call wall from 397 yesterday to 430. So those are two levels that have been the call wall levels for the last few days. So call wall for SPY is back up to 430. And then for QQQ, just a minor shift. The volatility trigger moved up from 295 to 297. Okay, so let's take a look at those gamma charts now. And again, this will provide more clarity on the levels. So this is showing the absolute gamma levels. This is for SPX. And this chart is showing the market makers gamma at different strikes. And this is the zero line. And above this line, this is showing positive gamma or call gamma. And below that line, negative gamma or put gamma shown with the teal bars. So black bars are the positive gamma, call gamma above. Teal bars are the negative gamma or put gamma below. So recall for weeks, maybe months really, the 4,000 level has been the key gamma strike or the absolute gamma strike. That is the strike with the largest absolute gamma, and that can act as a magnet or support and resistance. And now that has shifted down to 3,900. So now the absolute gamma strike or key gamma strike is at 3,900. And the put wall is down at 3,800. That's the strike with the largest net negative gamma, and that can be expected to act as support. And then the call wall is right there at 40.65, and that is otherwise not a very significant strike. It's just by definition the call wall is the strike with the largest net positive gamma, and that can be expected to act as resistance. So note the call gamma or the gamma is pretty evenly distributed between 3,900 and 4,000, almost equal amounts of put gamma and call gamma. And then there is a somewhat of a dominance of put gamma below the 3,900 level. All right, that's SPX. Let's take a look at SPY. So for SPY, 390 is the key gamma strike, the absolute gamma strike. And that was yesterday, that was the put wall as well, and now the put wall has dropped down to 380. Again, the strike with the largest net negative gamma. And then the call wall is way up here at 430. So I would say below $400, let's say 390 to, let me change that. I'd say really the thing to notice here is the dominance of put gamma below the 390 level. That's what stands out the most. All right, let's take a look at the combo charts. And this shows the combined gamma for SPX and SPY levels combined into one number in terms of SPX. And here is this is around the volatility trigger, the 3950, and put gamma below and some call gamma above. And the volatility trigger is Spotgamma's proprietary gamma flip level. And below that level, that indicates that market makers' position on the gamma curve is negative. That means that traders are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure. And this can work, that can work the other way around. If price increases and implied volatility drops, then they can buy back their short futures. And that is what has been going on today, the put Vanna rally. All right, so that is in terms of SPX, and that is, we'll leave it at that. Let's take a look at NASDAQ. So for NASDAQ, we look at QQQ. So here's QQQ, the key gamma strike at 300. Again, the largest absolute gamma. And the put wall remains at 285. And then the call wall at 310. Okay, so those are the gamma levels. Let's take a look at some data now. The gamma notional is what I usually point out. And this is showing market makers' position on the gamma curve for SPX in the left column, SPY in the middle column, and QQQ on the far right. And this is indicating for all these indices, the SPX, SPY, and QQQ, market makers' position on the gamma curve is negative. And again, indicating that they will be trading in the direction of price to hedge their delta exposure. And these levels, the changes from yesterday were actually mixed. So for SPX, the number became slightly less negative, just very slightly. Yesterday, the gamma notional was minus 706, and today it's minus 699. Yesterday, SPY became more negative. SPY became more negative today from yesterday. Yesterday, SPY gamma notional was minus 2285. Today it's minus 2440, so slightly more negative. And then for QQQ, became less negative. Yesterday, gamma notional for QQQ was minus 401. Today it's minus 276. So again, this is market makers on the position on the gamma curve, and this is it's quite negative for all these indices, especially the SPX and SPY. All right, there's a question in Discord. All right, so Truman makes comments. If market makers are, let's talk about indices first. So Spotgamma assumes that traders are long puts and or short calls. So that means that market makers are short puts and long calls. So in a negative gamma environment, they have a positive delta position, and as price drops, they have to hedge with price to hedge their delta exposure. And in a positive gamma environment, they are short call, they're long calls, so that's positive delta, and as price increases, they have to sell futures to hedge their delta exposure. So they will be trading against price as price increases, and then if price drops, they can buy back their short futures. Right, so that's for an index. All right, I hope that answers your question. If they are short puts or calls. So generally, Spotgamma assumes that, again, market makers are short puts and long calls. And the zero gamma level is just what it says. The zero gamma, at level of zero gamma, Spotgamma places more importance on the volatility trigger, and that's actually the flip level. Okay, let's move on. So we've looked at the gamma levels here. Let's take a look at the Vanna model, which actually illustrates what I was just talking about. And this is showing how market makers' delta notional changes with changes in price and implied volatility. And that's shown by the green curve, which is showing, again, the market makers, how market makers' delta notional changes with changes in price shown on the horizontal axis and implied volatility shown by the green curve. And that is the Vanna effect, the change in delta with a change in implied volatility. And this is showing that as price decreases, market makers' delta notional will increase, and this is typical of a negative gamma environment. And again, they have to sell futures to hedge their delta exposure. And it works the other way around. As price increases, their delta notional decreases, and they can buy back their short futures. So again, in a negative gamma environment, they're trading with price. And let's take a look at SPY. There's the Vanna model for SPY. And remember, the gamma notional for SPY is over 3 times the gamma notional for SPX. So this is steeper. And then there's QQQ. And recall, QQQ has been pretty strong this week, definitely with the situation going on with financial stocks, regional bank stocks. Traders have piled in large cap tech stocks, and that has helped to reduce the gamma notional for QQQ. All right, so that is the Vanna models, and let's wrap up the positional analysis. This is my key gamma strike list, and this is just a list of the stocks on my watch list, and I track the key gamma strike from the previous day to the current day. So the E column is showing the key gamma strike from yesterday, and the current key gamma strike, the D column, is showing the key gamma strike for today. And I compare the numbers and I color code them. And green indicates that the number, the key gamma strike, increased from the previous day. And I take that as a bullish signal. That means that traders are positioning themselves for higher prices. Right. Market makers are, traders are positioning themselves and accepting higher prices, and they're buying calls that are further out of the money, increasing that key gamma strike. So that's green indicating the increase from the previous day, red indicating a decrease from the previous day. All right, there's another question from Truman. All right, so let's talk about indices again. So in a negative gamma position, that means that market makers are, that's below the volatility trigger, their position on the gamma curve is negative, and that means that traders are long puts and market makers are short puts. And then above the volatility trigger, again, we're talking about an index. Spotgamma assumes that traders are short calls and market makers are long calls, and that's a positive gamma position, and that's above the volatility trigger. So right now, at least at the beginning of the day, market makers' position on the gamma curve was negative. All right, so that's our positional analysis, and based on this, I kind of had a mixed thesis for today. First of all, I was bearish for the S&P 500 based on the drop in the put wall for SPY and the key gamma strike for SPX, with a couple of caveats. That depends on the movement in VIX and the financials. And then for tech stocks, I was bullish just based on this yesterday, the increase in the key gamma strike, and all these stocks are tech stocks. That's what I trade, and most of these are the large cap tech stocks: Apple, Amazon, Google, Microsoft. And then notice today the increase in the key gamma strike for these stocks that did not increase yesterday. So this is bullish. Again, traders are looking for and accepting higher prices as they buy calls and position themselves. All right, so let's take a look at the S&P 500. We'll start with our setups now. Let's go back to Spotgamma, and this is the S&P 500 combined signal. And notice now they have Spotgamma has made a change to this. Previously, this symbol was the S&P 500 SPX plus SPY. That's how you found this. And now they're calling it the S&P 500, and it's a combined signal of SPX, SPY, and XSP. And the way you can find this, if you don't have it on your watch list, is just come up here into the search bar and just type S, and you can find it that way. So there it is, the S&P 500. And let me go back to that. I want to show what I was looking at this morning. So this is what I was looking at this morning, is this divergent setup. And I posted this in Discord, and this turned out to be just a small blip, a small head fake. But anyway, it led to, I had no idea what was going to happen later on, really. So anyway, I saw this. It was good for about 2 points in SPY or about 20 points in ES. This divergence, Hero starts dropping, and then ES SPY follows. So let's go take a look at Bookmap now. And I'm going to see, this was what I was talking about, just a little blip here. A reversal at the VWAP down to the 3900 level. So good, for 15, 20 points, something like that, or a little bit less than 2 points in SPY. And then price reversed higher, and I think there were several keys to that. First of all, you can see an order flow that aggressive buyers start to come in. See the green dots here starting to come in, CVD rising. Then these buy stop orders fuel the move higher. Let's go back and take a look at Hero now. So we'll scroll here a little bit, and you can see the shift in Hero. Traders start, as price drops down to that 3900 level, they start taking bullish options positions, and price moves higher. And then finally, about that time, there were a couple of other clues as well. First of all, VIX. Let's zoom in. Let's see. Well, first of all, note that VIX has pretty much been dropping since this high of 29.21 yesterday, and that means that traders were buying very expensive puts yesterday, and now they're paying the price of paying up for those puts. So let's zoom in on today. So there's the reversal in VIX. This is around 10:20, about the same time that ES SPX SPY starts to turn higher. So that's an additional clue. And then let's take a look at, this is the XLF, the financials ETF. And I think this was another very important clue that the XLF reversed higher about that same time. So we already know, and we'll see in a minute, that NASDAQ stocks, tech stocks were strong, and there were some great setups. And we saw in my key gamma strike list that there was a bullish thesis for those stocks anyway. So I think the key for the S&P 500 was the drop in VIX, and also the rise in financials here. So again, we know the tech stocks are strong, and the financials are joining the party, not holding the S&P 500 back. So I think that was, those were the clues, the keys to the reversal higher in the rally in the S&P 500. So multiple clues again: VIX, XLF, Hero rising, and bullish order flow in Bookmap. All right, so that's the S&P 500. And now let's take a look at some stocks. So there were some great long setups in a number of these tech stocks. So let's just start with Apple. We'll zoom in so we can just look at the morning session here. And there's a strong correlation between options trades, hedging flow, and price action. And let's go take a look at Bookmap. We'll take a look at Apple now. And thanks, RJ. You're welcome. All right, here's Apple. Nice strong uptrend. Again, remember, traders are taking positive delta positions. And they got to the call wall target here at 155. Notice the high liquidity there. If you're not familiar with Bookmap, this dark orange is showing the history of the resting orders, liquidity in the order book. And this liquidity attracts price. And there it is at the 155 call wall. So nice uptrend there in Apple. Let's go back. Let me take a look at Hero again. And we can separate out puts and calls. And this is showing that calls, the rising orange line, this is showing that traders are buying calls. And this is driving price action. And one way you can tell, of course, is the strong correlation between the orange line and price, which is the white line. And you can also look at this notional value and see that this is quite a bit larger than the blue line, which is showing that traders are buying puts, but the call buyers are dominating. And that has been driving price action higher, or at least it was this morning. Let's zoom out, and we can see that price levels off as traders stop buying calls, and then they continue to buy puts. And prices stalled around that 155 call wall level. All right, so that's Apple. Nice long setup. And Floyd's Garage in YouTube asks, positive gamma expires tomorrow. We can take a look at that. So that could lead to some potential setups. Call gamma unwind. So, and I would look for that in single stocks. And for single stocks, market makers are always in a negative gamma position. All right, so here's AMD. And let's zoom in on the morning, separate out puts and calls driving AMD as well. Let's go take a look at Bookmap. And the semiconductors that I track, AMD and NVIDIA, were very strong today. And there's something interesting to note here is the breach of the call wall, showing here just right after the open. That's the 90 call wall and key gamma strike. And recent data presented by Spotgamma to subscribers has indicated that for a single stock, again the single stock, a breach of the call wall can actually act as an accelerant for moving price higher. And let's take a look at Equity Hub. And and see why that may be the case. So this is AMD in Equity Hub, and Spotgamma provides several different views. What this is showing is the dominance of put gamma below this level in orange, and that is the 90 level, and that is also the key gamma strike and the call wall. So put gamma, put dominance below in red, orange, and then call gamma in green above. So AMD moved up above the 90 level and now is firmly in the call dominated region. Let's take a look at this put and call impact chart. I'm going to zoom in on this. And this is going to be somewhat like the gamma levels charts that we were looking at for SPX, SPY, and QQQ. So this is showing this key gamma strike, and that's pretty obvious that that is the strike with the largest absolute gamma, as well as the call wall, the strike with the largest net positive gamma. So as price moves up above that level, all these calls are gaining value. They're becoming more in the money, gaining more value. And remember, for a single stock, Spotgamma assumes that traders are long calls, market makers are short calls, and as the price increases, they have to buy stock to hedge their delta exposure. So as traders continue to buy calls, like we just saw in Hero, and these calls go in the money, they're gaining value, market makers have to continue to buy stock to hedge their delta exposure. And this is showing the slope of this line. We'll focus on the orange line here, is showing the rate of change of gamma, and this is showing that's going to level off, let's say above 100. Above this level, somewhere between 100 and this is like 105 to 109, something like that. All right, so that's AMD, and this is an explanation of that breach of the call wall and how that can act as an accelerant. And then AMD is a perfect example of that. Breach of the call wall, very positive, bullish order flow, price targets up above 92, 93, 94, and then the primary target at 95. Notice the very dark color there. That is the showing the large orders at that level. All right, so that's AMD. Let me check for questions. Market makers in a negative gamma position. So Floyd's Garage, I don't understand your question. Let's take a look at, let's go back to Equity Hub now. Change that back to total signal. We'll go to Equity Hub. And what I look at is this next expiry gamma percentage. And let's just sort the list by that number. And this is showing the next expiry gamma percentage. And anything over 30% is typically pretty significant. All right, so this right here, all of these. I would look at all these, and then I would look at the charts in the equity hub, just like I have for AMD here. And if I see a stock like AMD firmly in the call gamma region, I would look for a potential call gamma unwind in these stocks. So the way that works is these calls are all going to, most of these calls are going to expire tomorrow. And so they will quickly lose value, especially towards the end of the day. And that is then market makers' delta exposure will decrease as those calls lose value. That's the charm effect, the change in delta as time passes. So market makers, as their delta exposure decreases, no longer need their long stock hedges, and they can sell their stock hedges. And sometimes, if traders, especially if traders don't continue to buy calls tomorrow, then that can lead to a nice short setup for that call gamma unwind. Okay, so Floyd's Garage, I hope that answers your question. And RJ asks, is the key gamma strike the same as the absolute gamma strike? Yes. Same thing, just two names for the same thing. And a break of that level, does a break of this level create acceleration? No, not necessarily. But in the case of AMD, it's at the same strike, which is not unusual. And that Spotgamma's research and stats indicates that it's a break of a wall that can cause acceleration. All right, so tomorrow we'll go through this. Well, let's take a quick look and see. So NVIDIA may be the same situation as AMD. Snowflake, no, put dominated. Tesla, no, put dominated. AMD, yes, we just looked at that. Apple, maybe some call domination above the 160 level. Amazon, maybe. Call dominance above the 105 level. Meta, good chance. Call dominance above the 195 level. And Meta's trading in this call dominated region. And Microsoft, call dominated above 270. So I would look, if you're looking for a call gamma unwind, I would focus on NVIDIA, AMD, Meta, and Microsoft. All right, let's move on. Let's go to, there are some other setups that I want to cover. AMD, Amazon. Traders buying calls again. This is a pretty common theme. Let's go to Bookmap. Another strong rally here in Amazon up to the 100 call wall key gamma strike. And notice AMD hit the call wall key gamma strike very early in the day, around 10:45, and then other stocks like Amazon here rallied up to that level and seemed to have stalled around that level, maybe moving higher now. But anyway, that was the primary target for this morning. Let's go back and take a look at Hero. So traders, Oops. So it seems like if you have it on puts and calls and try and make a change, it doesn't act well. So I always need to remember to change it back to the all trades or total signal. So notice here that again, as traders stop buying calls around lunchtime, 12 o'clock Eastern, price levels off, and they're buying puts also. So that's why price is stalled at that 100 level. All right, let's change it back before we make any changes. Update. Take a look at Meta. All right, let's take a look at, and Carmo Trades asks, can I repeat why Tesla is put dominated based on the composite view? Because of the color of the composite view. It was all light red, meaning a lighter position, but the red, orange, anything from orangish to dark red indicates put dominated, and any shade of green indicates call dominated. All right, so there's Meta. Let's go take a look at Bookmap. And Meta headed in the other direction. Initially, it headed down, and Meta's been quite strong this week. Maybe traders were initially taking profits. Hero led down and up for this rally, and it looks like Meta reversed higher just around the same time as the S&P 500 with the 200 call wall key gamma strike as a primary target. All right, RJ asked, do I look at VIX? Does it use... All right, I'm not sure I understand your question. So VIX options are based on the VX futures, I believe, and I don't look at VXX. I typically just look at VIX. So options on VIX are based on the futures. And somebody correct me if that's not right, but that's my understanding. All right, so that's Meta. Let's take a look at Microsoft. And somewhat similar to Meta, a little bit of a chop, a little bit of a drop down in the morning. And remember yesterday, Microsoft led the way higher, and then it took a while to get going on Microsoft. Let's take a look at Hero for Microsoft. And notice the chop, flat Hero in the morning, and then start to rise and price follows. So that's Microsoft. And let's just separate out puts and calls. So really calls driving, but not as clear as some of the other stocks that we looked at. Total signal provides a better signal. And let's take a look at NVIDIA. And you're welcome, Carmo Trades. And Floyd's Garage and YouTube, you're welcome as well. All right, so here's NVIDIA. And strong correlation as usual between hedging flow and price action. Mainly calls driving. You can see by the rising orange line. And again, note the strong increase in the morning. Hero levels off, starts to drop down, and price levels off. And let's go take a look at Bookmap. And this is, I'm going to have to turn this down. This is the absorption indicator, just kind of obscuring price here. And we'll turn down sweeps. This automatic mode sometimes, you just have to make an adjustment to see the appropriate number of sweeps and absorption. So very strong uptrend here, reversal higher at the .240 key gamma strike. Note the rising cumulative volume delta. And first target at the 245 liquidity. Next target at the 250 call wall. And now price continues higher. So that's NVIDIA. Take a look at QQQ. It looks like I need to add more lines to my my price line spreadsheet. So another strong uptrend and reversal higher around 1020 at the VWAP. Let's take a look at Hero. And this is not as clear. Actually kind of a, let's just zoom in on the morning. So somewhat of a early morning confirmation up till about 11 o'clock, and then traders started taking negative delta positions, fading this move higher. So let's see what they're doing. So they've been buying puts pretty much since the open. And RJ, I was actually just going to look at that. So let's first of all go back to the total signal. And no, not necessarily. Notice so I'm looking at this kind of teal green line. That's the 0 DTE. Oops. That's the 0 DTE. Compare at around 117 million versus the total all expirations at 685. So this is really most likely options that expire tomorrow. And we can confirm this in Thinkorswim. All right, for a call volume, and this may be hard to see. So this is showing call volume is dominated by the 305 strike that expires tomorrow. And then puts, and this is showing puts that expire today at the 304 strike are dominating volume. So that is puts that expire today, calls that expire tomorrow. That's what Thinkorswim is showing, the option stats for QQQ. All right, so there were much easier to read setups in the single stocks rather than QQQ, and also the S&P 500. Then finally, let's wrap it up with Tesla. And there's, as usual, a strong correlation between hedging flow and price action. It took a while for Tesla to get going here. So really, the key reversal higher was around 1020 when the S&P 500 reversed higher. And traders are buying calls and selling puts. So we'll go to Bookmap and we'll take a quick look at Tesla, and then we'll take a final look at the S&P 500. So here's Tesla. And the choppy action, the reversal at the 180 key gamma strike around 1030, 1020, and then price moves higher. And note the shift to the green dots here, shift higher in the CVD. And bullish order flow up to the, and again, that's off the call wall, up to this 185 liquidity. And also, like many other stocks, trading up to the upper edge of the expected move for the week. All right, let's take a final look at the S&P 500. Here's the SPY. We'll wrap it up with SPY, showing the strong move up around 1020 up to and past the 3950 SPX 3950 resistance level and the 395 volatility trigger up to the upper edge of the expected move and the 396 strike, and now price is moving lower. And we'll just take a quick final look at Hero. And let's go to the S&P 500 signal. And that has been, traders have been fading this move higher since about 12:30, 1 o'clock, maybe even 12 o'clock, noon. Zoom in on a little bit of this. So traders started taking negative delta positions around 12 o'clock, and then price seems to be finally responding. Okay, that's all I have for today. Let me do a final check for questions. And Mitesh asks, do you manually add the levels to each stock, or are they extrapolated from Spotgamma somehow and the levels do come from Spotgamma, but I add them manually. I use an add-on in Bookmap called Priceline. This is available in the Bookmap marketplace, and I fill out these levels in a spreadsheet, whatever I want. So I'm showing SPY levels. I like to show the round number levels. Also, I note the key Spotgamma levels, and then I'm also showing the SPX levels. So I just calculate the ratio of SPX to SPY, and then I show the location of the SPX levels as well. So I do that in a I enter all that information in a spreadsheet, and I'm just using that Pricelines add-on. So there is, I have to change the levels manually in my spreadsheet. They're not updated in Cloud Notes like the ES futures. So I hope that answers your question. Okay, that's all I have. I think I've answered all your questions. And remember, tomorrow is the options expiration with an AM settlement for SPX, also a PM settlement, and then everything else expires at the end of the day. So thanks again, and I will see you tomorrow.